Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
The House right now, as we speak, is voting on a motion to reconsider a rule that failed yesterday. This is a procedural hurdle to try to get them to be able to vote for final passage on various pieces of crypto legislation, because yes, it is still crypto week in the House. And what they want to consider is a stablecoin bill, the Genius Act that was passed by the U.S. Senate already, a market structure legislation package called the Clarity Act, and then some anti-CBDC legislation as well. That rule that failed yesterday wasn't supposed to see another failure again today after President Trump met with the holdouts at the White House yesterday and came out saying they had all agreed to let this rule pass. Yet there's 3 no votes on the board right now. So let's get the latest with Megan Scully, who leads our Capital Influence team here in Washington, covering Congress for us. So Megan, is there a chance that we see failure again here? I thought the president said he had a deal.
Yes, he did sound like it was all wrapped up tight, didn't he? But it does appear that it is in trouble. Now, votes can change before they gavel it. So I'm sure that there is a lot of lobbying happening on the floor right now. The president definitely doesn't want to see this go down, particularly after calling all of these hardliners into the Oval Office last night. So, but we are watching it closely, and we'll see. This does not, if this does go down, it does not necessarily mean crypto week is over. It could certainly, they could strike another deal. They could bring this up again within a matter of a few hours and get this all back on track, as we've seen happen again and again this year.
What are the hardliners asking for and maybe not getting if we're seeing them still hold out or drag their feet, despite Donald Trump trying to get them aboard?
So last night, what they were asking for was to attach this central bank language to the stablecoin bill.
It's all about the Fed.
Yes, which essentially would force the Senate's hand, would require the Senate to amend its own stablecoin bill, which it doesn't want to do. It just wants the House to pass the Senate bill so they could all move on. But this would force the Senate then to address the issue later this week, presumably. As for what is the issue right now, we are trying to find that out.
Well, it's interesting. We spoke with Senator Tom Tillis of North Carolina on Balance of Power last night, Megan, about the idea that the House could try to change the Genius Act and send it back to the Senate. And he suggested that could be a deal breaker, that the House shouldn't do that. The problem is that the House doesn't do that. The House, once again, has gotten jammed by the Senate. This is just lawmakers in Congress, at least some of them, feeling like there's a repeated pattern here where they don't have the power, the authority.
Yes, I think part of what we are seeing here, the undercurrent here, are these hardliners feeling like, as you said, that they are being jammed by the Senate, that they need to sort of take whatever the Senate ultimately passes. And you're talking about people who don't typically work well in that area. Marjorie Taylor Greene, Victoria Spartz, several others. So they are trying to essentially lay down a marker here and make a point and say, you know, we are our own chamber, equal powers, all of that. And I think that's a lot of what is playing out here.
Megan, we've seen Bitcoin climb to new records this week in anticipation that there would be a breakthrough on at least the Genius Act. How significant is this for the industry, for the crypto industry, which is trying to shed some of its, I guess, outsider image?
Right. Yes. This package of bills, all very heavily supported by industry. This is something that for the last year plus they've been trying to shepherd through Congress. So this is an incredibly big deal for the industry as a whole, and its top priority, particularly the stablecoin bill. You know, this year, failure to get this through. We saw yesterday, you know, stocks drop after the procedural rule fail. So I presume, you know, everyone in the industry and elsewhere is looking at this vote going on right now very closely.
Well, and one quickly on a vote that could happen shortly, Megan, in the Senate,
yes.
specifically the rescissions package, where we saw 2 procedural votes yesterday having to be a tiebreaker, with Vice President J.D. Vance casting the tie-breaking vote. Is there a guarantee that this is going to actually be able to pass, these $9 billion in rescissions?
Well, I don't think anything is a guarantee right now, as we're seeing play out on the House floor. But what we are kind of continuing to see in the Senate is Thune seems to be, the majority leader seems to be very attuned with his caucus, and he's able to lose 3 with J.D. Vance, casting the tie-breaking vote. We saw that as long ago as Trump's nominees, like Pete Hegseth, getting over the line with tie-breaking votes. And, I would suspect we're going to see more hemming and hawing. We're going to see some consternation, but ultimately, perhaps J.D. Vance coming in with the tiebreaker. I do think the decision to protect the AIDS funding, the PEPFAR funding yesterday, that is a very popular program, and the decision to protect that instead of stripping it from the already appropriated funds, that surely sweetened the pot for some on the fence Republicans.
All right, Megan Scully leading our Capitol Influence team here in Washington. Thank you so much. And it's to the Capitol, or Capitol buildings, that we go now. Live on Capitol Hill, we're joined by the chair of the House Ways and Means Committee, Congressman Jason Smith of Missouri, is here with us live on Bloomberg TV and radio. Mr. Chairman, welcome back to Balance of Power. There's a lot we want to discuss with you, but if we could begin with Crypto Week, which perhaps is not going as smoothly as you or many of your colleagues may have intended it to. Is this ultimately going to move forward, or do you get the sense that the holdouts are still willing to hold out on this trio of legislation?
Let's just look at the 119th Congress. It has some ups and downs along the way. We just passed the biggest piece of legislation in years in the One Big Beautiful Bill just the last week that we were in session, and people said that there was no way that we could ever do it. And I continue to say failure's not an option. Of course, the crypto legislation that is on the floor is within other committees of jurisdiction from the House Ways and Means Committee. We're working on our own crypto items that's not on the floor. But I truly believe that we'll be able to iron it out, get it together, and pass it. We have always, whether it's funding government, whether it's the debt extension, people didn't think we could do it. It got a little rocky, but we still got it done. And it's going to happen the same here today.
Chairman Smith, if we see passage today or even later this week of the Genius Act, do you anticipate that this will clear a path eventually for something on market structure? We know that this is another bill that has been in the works, but it seems a little bit further behind in terms of development and perhaps support, too, among lawmakers.
I think without a doubt, there's a comprehensive effort to make sure that we are the crypto capital of the world. That's what President Trump has said over and over again. We had a hearing this morning in the Ways and Means Committee on cryptocurrency and taxing digital assets. This is another point that has to be addressed and looked at. And that's what the Ways and Means Committee is focused on from this gamut within the digital asset space. It's super important, as you know, to the markets, to investments. There's 50 million Americans that are involved with digital assets. So that's pretty substantial. And we need to make sure we continue to be the world leader.
Well, of course, markets and investments also care very much about tax policy, which is why we all paid such close attention to the tax changes and extensions that were included in the One Big Beautiful Bill Act, one piece of budget reconciliation. But Mr. Chairman, the chair of the Budget Committee, Jody Arrington, told our colleagues this week that he wants to work on a second budget package to pass by the end of the year. I wonder if you see that as likely, given how hard it was to get the first line across the finish line, and what, if any, tax changes you would want included in a second reconciliation package?
Well, let me just say there has never been two partisan reconciliation bills that have become law in the same year. That's never happened before. So trying to do a second one is doing something that when the Democrats controlled the White House, the House, and the Senate, they attempted to do two and then ultimately couldn't pass Build Back Better. And then the next year, they did a second reconciliation bill, but it wasn't in the same year. So it is extremely difficult to do. because passing a budget reconciliation is not easy. As you saw, what we passed just recently, which is the largest tax cut in U.S. history, the largest spending cuts in U.S. history, the largest welfare reforms in U.S. history, the largest one-time investment in border security in U.S. history, that wasn't easy. And we had to pass it just in the House. The first initial vote was 215 to 214.
Right.
So it was by one vote. The Senate, JD Vance had to do the tie-breaking vote. So it's very, very
Yeah.
difficult. But if we come up with a reconciliation package that addresses needs for working families, small businesses, and farmers, we'll get it done. But it needs to make sure it addresses those points.
Chairman Smith, I wanted to shift gears a little bit and talk about tariffs and tariff revenue. To set up the conversation, I wanted to bring in something we heard from Peter Navarro on Friday on this program, talking about tariff revenue.
I would say that for the American people, these tariffs are a great boon. I brought a chart here. It shows that we've already collected like $100 billion of tariffs.
A record for a single fiscal year.
Yeah, the tariffs are working, and they were these kind of revenues that we're getting. It's a very important part of the big, beautiful bill in terms of financing that as well.
Chairman Smith, how much are you expecting on the committee in terms of revenue from tariffs that the president has imposed this year already, and the other tariffs that we are expecting not only on U.S. trading partners, but on sectors, on goods in various sectors, including drugs and semiconductors and autos and so forth?
So let's just look at the last month in June. This is something that a lot of people's not paying attention to or discussing. If you look at the revenues that came within the federal government and the expenses we had, last month was the first time since June of 2016 that we had a month that created a surplus, not a deficit. Of course, we need a surplus for 12 different months, but if you look into why did the month of June actually have a surplus and not a deficit spend, it's because of the increased tax revenues, but also the increased tariff revenues. Those are the two biggest issues that led to making sure that government was balanced for the month of June. So tariffs do play a part of the role. I've said all along, when you're looking at the fiscal sanity, the fiscal responsibility of government, you have to look at three different legs. You have the tax issue. You need certainty in the tax code. We just finished that with the one big beautiful bill. Then you have the trade mechanisms, and then you have the deregulation. Once you do those three legs, that will create an economy that will go gangbusters, and it will help us balance our budgets. And these trade agreements that the president's working on, you're even having CEOs now of some major U.S. companies that's going out there saying, I was opposed to the president's tariff policies, but they're really not making an impact. They're not inflationary. They're not raising prices, and I think they're working.
Well, Mr. Chairman, we know that President Trump is paying close attention to that lack of an inflationary read-through, at least at this time, from his tariff policy, and he sees that as further justification for his view that the Federal Reserve should be cutting interest rates right now. I'm sure you're aware of the reporting, which the president has pushed back on, that he was considering firing the chair of the Federal Reserve. Do you believe he would have the legal authority to do that? Is questions over the cost of the renovations to the Fed buildings here in Washington justification for firing for cause?
First off, I will tell you, I agree with the president that interest rates should be cut. Interest rates were raised because we went through an inflationary crisis during the Biden administration where inflation went up 22%. We now have the lowest inflation that we've had in 4 years, but yet they've not reduced one time the interest rates. So he has a valid point when you're talking about the interest perspective. If you look at other heads of different agencies, whether it's the IRS commissioner chose to step down whenever President Trump was elected so that President Trump could put in place his person. This is something that I would consider Mr. Powell to do. He should consider resigning because clearly he's not aligned with the president of the United States. Other people's done that with the agencies. I think Chairman Powell should consider his place in government right now.
All right, Mr. Chairman, we appreciate you joining us. Congressman Jason Smith, the Republican representing Missouri, of course, and chair of the House Ways and Means Committee, here with us on Balance of Power. Thank you so much. And that is another question, Mike, of course, is not just whether or not the chair of the Federal Reserve could end up being fired, but whether he could resign under what is still immense pressure from not just President Trump, but others in the administration.
Even though he has indicated that he would do no such thing, and he has tried in every way possible to resist that pressure.
Yep, and has also tried to say repeatedly that it is not applicable with the law to fire the chair of the Federal Reserve. We'll see whether or not we have to actually test that legal theory. We'll continue to follow this story here on Balance of Power on Bloomberg TV and radio.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Kailey Leinz alongside Mike Shepard here in Washington today. Welcome back to Balance of Power on Bloomberg TV and radio, where we just spoke with, as Charlie mentioned, the chair of the House Ways and Means Committee, Congressman Jason Smith, who, yes, said the chair of the Federal Reserve should resign when we asked him about whether or not President Trump could legally fire Chairman Powell, whose term is set to expire as chairman in May of 2026. But President Trump, of course, in the Oval Office, when questioned by reporters about this earlier today, suggested he's not planning to fire him, in part because May 2026 isn't all that far away, and he soon gets to pick Powell's replacement.
We get to make a change in the next, 8 months or so, and we'll pick somebody that's good, and we'll pick somebody. I just want a fair job. We want to see lower interest rates. Our country deserves it. We're making a lot of money. We're doing great as a country. We have no inflation, record stock market, record business, record everything. Everything's a record now. We had the worst inflation in history under Biden, and now we have almost no inflation. We've done a great job, and we should have the interest rates cut.
President Trump, perhaps, Mike, feeling empowered to talk about the lack of inflation by the inflation data we got today, PPI, literally 0% gain month on month.
And yesterday, too, the CPI, at least at the top level, if you drill a little bit lower into actual categories like appliances, we are seeing some upward price pressure. But for the White House, that top level number in CPI also surely gave the president some free rein to talk about cutting interest rates. And that's something that's critical to his agenda. He wants to see mortgage rates go down. And he also wants to see the cost of investing for business go down, too, given all of his interest in having plants built across the U.S.
Yeah, and that's why President Trump says when he's choosing Powell's replacement, he's only interested in low interest people. So on that note, let's bring our political panel into the conversation. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick, of course, Stone Court Capital partner and Republican strategist. Jeannie, Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Jeannie, I wonder how you read into the reasoning President Trump has around interest rates that Mike was just referring to, that actually, at the end of the day, what this really is about for him, in large part, he says, is about the interest burden of the United States, making sure those payments are lower. Is this the president that maybe is a bit more worried about our debt and deficit, knowing that his one big beautiful bill just passed that will add to it?
Yeah, I don't know of a president, Republican, Democrat, anywhere in between, who has not wanted lower interest rates. So in this way, Donald Trump is perfectly in keeping with every, not just president probably, but every politician or most of them. And sure, he is going to be concerned about the interest rates. He's going to be concerned about debt and deficit, because this reflects on him. The number one reason he was elected, according to those exit polls in 2024, was that he promised to be able to manage the economy in a way that people felt Joe Biden simply wasn't doing, that he was a sound manager as a former businessman of the economy. And so as he sits here today, 6-7 months in, he knows he owns this economy, and interest rates are something that we all feel as consumers and voters. So it does matter. And we all, of course, see the ticking up of the deficit, and that matters as well. So he's looking at the same numbers we are. Voters feel it, and so it matters to him.
Rick, when it comes to numbers and what the president and his allies in Congress as well are looking at, how much are they factoring in the market reaction? It was quite negative when those reports began to emerge that the president had not only floated the idea of firing Jay Powell in private, but even waved around a letter. We've seen those numbers recover a little bit, but how much of this is a factor in their thinking?
Yeah, I think quite different from his first term, where he seemed hypersensitive to market changes. He seems a little bit more immune to them in this term. Obviously, the biggest crisis he'd had in the markets was when he got into a bit of a trade war earlier in his administration and backed right off of that, yielding us a new acronym, taco tariffs, and the taco trade. And so I think he's thinking more long term on this. I think you guys are absolutely correct that he's got the deficits in his rearview mirror, looking at those every day, realizing that these interest rates that keep ticking away are not very dynamic. They're very much a penalty to any administration. It runs up the deficit, and that's exactly what he's just done with his big, beautiful bill. But the other key component to his entire budget strategy is economic growth. And he needs these low interest rates for economic growth. So maybe less focused on the markets today and much more focused on new building development, manufacturing starts, things like that, that really require lower interest rates in order to create that kind of economic growth, which of course all his models that he argued for in selling the big, beautiful bill were 3.5%, 4% GDP. He's a long way off of that. And so I think that's what's really fueling his interest here.
Well, but doesn't that just speak to the kind of catch-22 for the president, Rick, where he wants juice to grow, or he wants growth to be juiced, so he wants interest rates lower, knowing growth might take a hit ultimately from his tariff policy, depending on the extent to which tariffs are actually implemented and for how long they stay in place. But it's those very tariffs that is keeping the Federal Reserve on the sidelines for now, not wanting to cut interest rates because of inflation. Can't we chalk up all of the difficulty he has around interest rates to his own policy, not necessarily the Fed's?
Yeah, I think that this is a massive change. This is not a small change. And if you follow sort of the Mar-a-Lago Accord in the significant alterations of the global economic infrastructure that exists today that this administration is pursuing, there's a lot of friction. And I think this is the kind of friction you're seeing happen right now on these issues. You know, could he get the Fed to move more quickly if there weren't pressures on prices because of tariffs? Absolutely. But he needs those tariffs to generate revenue in order to reset the financial relationships. And of course, one of the fundamental aspects of his realignment economically is getting down the trade deficits. And so, you know, he's not going to give that up. What he wants to do is get rid of Jerome Powell.
Jeannie, it's been very hard to keep up with the fast-moving pace of everything that is happening here with Trump, from Jay Powell to tariffs. How do Democrats keep up with this, and can they form a coherent argument around the economy that packages all of this together?
Yeah, they're going to try. Now, Mike, I always say Democrats and forming a cohesive sort of narrative to sell at an election, it's something like an oxymoron. It doesn't work so well all the time. But given the big, beautiful bill, they should be able to do that. And, you know, what's working against them are things like Mamdani's potential election in New York City. But putting that aside, they are going to be arguing, number one, about healthcare and the impact of this big, beautiful bill on healthcare, the impact of inflation. We've seen that tick up, the impact of debt and deficits on their children, their grandchildren. But I think most important to make the case that Donald Trump is doing the bidding of the billionaires and the very wealthy, and he is leaving aside the people he claims to care most about, the working and the middle class, who bear the brunt of all of this, including, by the way, on his tariffs. I know his talk about tariffs is always they, meaning the other country, will pay 19% in the case of Indonesia. The fact is, Americans at home will bear the brunt of that, and it is a regressive tax. So Democrats have to make that case.
All right, Jeannie Shanzano and Rick Davis, our political panel here on Balance of Power, both of them Bloomberg Politics contributors. Thanks for being with us, as always, here on Bloomberg TV and radio. And we want to go live now here on Bloomberg to the North Lawn of the White House, where we find Bloomberg's chief political correspondent, Anne-Marie Hordern, having just been in the Oval Office with President Trump and having the chance to question him about his intentions with the chair of the Federal Reserve. So, Anne-Marie, obviously some pushback to today's earlier reporting.
Yeah, a lot of pushback from the president in the Oval Office. He talked about the fact that he is not looking or planning to fire Jay Powell. When I asked him about this draft letter, did he write it? Did he wave it in front of congressional Republicans at this dinner last night? He said, no, there is no letter. He discussed the, quote, concept of the idea of firing the Fed chair. He actually said that lawmakers, most of them were really in favor of it, but he said he is more conservative than they are. So he pushed back on this notion, but he continued, of course, to bring up his gripes with Fed Chair Jay Powell. One, of course, being the fact that he thinks the Fed should be lowering interest rates, and we have not seen the Fed do that, of course, since last year before the election. And now this new one that you've seen a lot of administrative officials really start to push, going after the Fed chair for the renovations that are taking place at the Federal Reserve building. So he kept those talking points, but he made it pretty clear that at this moment he has no plans to fire the Fed chair, which of course would open up a huge legal battle, because this would be a precedent in American history.
Anne-Marie, are you getting a sense that that whole question of the renovation of the Fed headquarters is emerging as a coherent means of arguing for and justifying the Fed chair's exit?
Well, they definitely are looking into it. And even within the Fed, we do know that the Fed chair, Jay Powell, is asking questions about it. How did the renovations become over budget, et cetera? So he clearly wants to make sure that he has the answers if there are those questions. But this seems to be a new line of attack on the Fed. But the president continues to go after what for him is the biggest problem, which is where interest rates are right now. And he wants to see them lower. Of course, a lot of economists on Wall Street, even ones that are sympathetic to the president's view, like Neil Dutta of Renmac, who says the Fed should be lowering interest rates, said if you were to fire him, it'll have the exact effect in the market that the president's looking for.
Yeah. Well, it all comes down to the behavior of the bond market, I guess, at the end of the day. Anne-Marie Hordern live at the White House for us. Thank you so much for being here on Balance of Power, and we'll have more straight ahead. I'm Kailey Leinz alongside Mike Shepard right here on Bloomberg TV and radio.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Both Wall Street and Washington paying attention to the narrative around the Fed chair Jerome Powell with equal interest today, as President Trump, again, as we've told you repeatedly this hour, has said he is not planning on firing the Fed chairman. But he still is unsatisfied with the chair's performance and with the current state of interest rates, which he wants to see lower in the face of what he said in the Oval Office today, Mike, is, quote, no inflation. And at least looking at the PPI data that we got today, you could see how that technically might be true, at least in this particular instance, as both PPI on the headline and core Xing out food and energy month on month rose 0%.
It would be a very favorable reading for the president and his point of view, but it's only 1 month.
Yeah.
And the trend is something that Scott Bessent yesterday had pointed to before the CPI numbers came out. And what was interesting in our conversation with Stuart Paul earlier today is that he dug through the numbers a little bit more deeply and found some increases in appliances and other goods that suggest that, yes, tariffs are actually starting to have an effect at that level where consumers and, yes, voters too could start seeing them.
You know who else digs through the inflation numbers? Michael McKee, Bloomberg's international economics and policy correspondent, and he's joining us now here on Balance of Power. So, Mike, to the point that Mike Shepard was just making about it being what's actually underneath the surface of the data that ultimately matters. When you look underneath, it's not necessarily true that we see no inflation, as President Trump suggests.
That's right, Kailey. What we saw was a drop in service industry inflation in the PPI that was strong enough, because it's a service industry economy, to push down the overall number, or to keep it flat rather, which on a year-over-year basis brought down the PPI inflation numbers. But the goods inflation went up, and we saw goods prices rise on a number of areas that are tariffed. So for the Fed, they're going to be looking at this and saying there's evidence that tariffs are going to bleed through into the economy, and they are going to cause prices to go up. I go back to what Mike just said about it's only 1 month. So the Fed's going to want to make sure that this is a continuing pattern, and it could get worse before they do anything. So even though this would make the case to somebody who didn't understand economics, like perhaps the person in the Oval Office, it's not going to make the case for the Fed. And so I suspect that the president is going to be disappointed at the July meeting, even if the numbers suggest that inflation is somewhat tame.
Now, the Fed chair has insisted that the law backs him up in staying in his role. But he is under significant pressure from the administration to maybe move on, and perhaps move on once his term ends and leave the board. Do you see or get a sense that he may decide to stay on after all once he leaves his role as chair?
There's sort of a unanimous feeling, Mike, among the people I've talked to, both at the Fed and in the economics profession, that the only reason Powell would stay on after the end of his chairman's term is if he worried about the Fed as an institution. If the president put in somebody who was going to be a bull in a china shop and take away credibility from the Fed, he might try to stay on. But even he knows that that would cause problems for the overall Fed, because in essence, you'd have two Fed chairs. You'd have somebody the president appointed whom the markets may not want to listen to, and then you'd have Jay Powell, whom the markets are used to listening to. And if the new chair said something, Powell could contradict it, and that would really throw markets for a loop. So it would be difficult for the Fed if that happened. But if he thought it was a bad enough situation, he might do that. And I think that's why he's not saying he's going to leave. He's trying to use that as a bit of leverage on the White House to keep them from going too far.
Well, as we consider how the markets view all of this, Mike, it ultimately is the bond market that will dictate the interest rates that are actually paid on things like our national debt, which President Trump said in the Oval Office, once again, is really his issue with where the Fed funds rate is right now. Let's remind ourselves what Trump said earlier.
He's not doing the right job. We should be saving $1 trillion a year in interest. You know, when he talks about cost, we should be saving, think of it, $1 trillion a year. Add that with the tariffs and everything else. But he just doesn't want. He's a knucklehead.
I'll leave the knucklehead comment aside for now, Mike. But if ultimately the objective here is to make sure that rates come down, to the credibility point that you were just making, isn't there a chance that even if the president were to get what he wants, either through a new chairman or the Fed actually cutting rates under pressure, that then its credibility is a problem? The bond market doesn't buy it, and it doesn't actually change the amount we have to pay in interest, or makes it higher.
Yeah, absolutely. That's the base case for the opponents of all of this, is that the president isn't going to get what he wants, because while the Fed can lower short end rates, they can't affect long end rates. That's the province of the markets, and the markets are going to decide whether they think there's a possible inflation problem or whether they think that there's a debt problem. And they're going to react to it. So odds are that if the president put in a toady who basically tried to force through a rate cut, the markets would send rates much higher. And that's another reason people just don't understand what the president's problem is here, because his strategy for getting lower interest rates is kind of the opposite of what you need to do.
Indeed, it is. Michael McKee, Bloomberg International Economics and Policy Correspondent. Thank you so much. And as we watch this here at Bloomberg, as Wall Street watches this, we know Capitol Hill is watching this as well, and people who used to spend a lot of time on the Hill.
Well, that's right, Kailey. And we're joined now by Patrick McHenry. He is the former chair of the House Financial Services Committee and former Speaker pro tempore and a Bloomberg contributor. Chair McHenry, we're so glad to have you with us today. You have to be watching this Fed drama unfold today with a certain amount of, nostalgia, or maybe an insider's appreciation of what is going on. Now, is it your sense that the president actually is serious about what he said to lawmakers behind closed doors last night, or is he more serious about what he said in public today at the White House?
Well, both things can be true. What this president has been very clear about is that he doesn't like the interest rate policy of the Federal Reserve. He puts that fully on the chair of the Federal Reserve. So there are two things that can be true at once. One is that he doesn't like Powell's approach to rates being, too late at the beginning of COVID, and thinks that our rates should come down now. And then the second part is to see that the second part is that the Open Markets Committee is dominated by Biden appointees. So even if you remove the Fed chair, you still have an Open Markets Committee that has a different view than the president does. And you're talking about a Fed chair's term of office ending at the beginning of next year. So I think what we're seeing today is the president highlighting the fact that inflation is come way down, that the tariffs haven't had a dramatic negative impact on inflation counter to expectations, and is trying to drive his economic message in light of what we know is the inflation print this morning. So all these things are complicated, and there's a lot going on here. But the key message that the president's trying to drive is an economic one, not a personnel conversation.
Well, I'd like to ask you about a separate live conversation happening as we speak, Mr. Chairman, on Capitol Hill right now as the House is moving toward reconsidering the rule that failed yesterday, a procedural hurdle to advance 3 different pieces of crypto legislation as part of Crypto Week. The rule that failed yesterday was because of a handful of lawmakers who actually convened with the president at the White House last night, a meeting which the president emerged from saying, we have a deal. They're now going to vote to pass the rule. And indeed, the chair of the Freedom Caucus, Andy Harris, confirmed that on X a few minutes ago, that they will be voting in favor of the rule today. When do we break out of this pattern of people voting no initially, President Trump stepping in, and they ultimately decide to change their minds? What's the point of the exercise?
That is the point of the exercise, which is I'm going to stop your agenda, President Trump. You're going to bring me to the Oval Office. I will say to you, I love you, and I didn't want to hurt you. Give me assurances about some extraneous random thing, and then they vote yes. So what they want is the attention and love of the sun, the moon, and the stars. And right now in the Republican ecosystem, that is in the person of Donald J. Trump, who controls this party unlike any other politician in modern American history. He has control over his party and thereby the policymaking on Capitol Hill. So it is a messy way to do it. It is very embarrassing for congressional leadership to have to send members over to the White House for the president to close them again. But that's the process that we're going through. And inevitably, what they've shown, what policymakers on Capitol Hill have shown, especially the Freedom Caucus, is that they will cave, they will fold, and they must do that in the room with the person of Donald Trump, but they will inevitably fold for no change in policy. And that's what's happening once again with crypto. That happened on reconciliation. It's happened probably a half dozen times so far this legislative year, and will continue.
Chair McHenry, is it your sense then that this actually gets through this week? Do we actually see Crypto Week ending in this victory lap for crypto advocates?
Yes, we do. We see a bipartisan vote for the stablecoin bill, the Genius Act. And we see less of a bipartisan vote because of the maneuvers of the Freedom Caucus for the market structure bill, which brings clarity to 93% of the crypto marketplace. That's the bigger bill that will have to come later. But the stablecoin regime will have a nice bipartisan vote this week, which will show that crypto does have massive power within both of the parties, much more so in the Republican Party than the Democratic Party, but a significant group within the Democratic Party are pro-crypto.
Well, to follow up, Chair McHenry, how much more work does need to be done on that market structure bill to get it through to win the support it needs?
Well, my colleagues and I worked very hard for the last 5 years on crypto in the House of Representatives. And so we've got a pretty well-baked approach. Policymakers on both sides of the aisle who are engaged in policymaking, that's a smaller group, but they are well-versed in the set of policies that are in the Clarity Act or last Congress called Fit 21. That is the market structure bill that brings clarity to commodities and securities and defines a digital asset and a means of exchange. So House members are much further along on this than Senate members. And so the Senate is going to have to take a lot of time to actually understand this policy, the trade-offs to go through this, and then go through the stages of grief before they can get to actually voting on a market structure bill. Hopefully that happens this fall, but it's going to take longer than expectations, unfortunately.
Well, Mr. Chairman, we just have a minute left. Is that effort in the Senate, knowing it would require Democratic buy-in, potentially disrupted by a rescissions vote we could see later today or tomorrow that Democrats obviously don't want to see? Do you see that disrupting potentially the appropriations process and any further bipartisan effort on crypto or other things?
Yes, I think when Chuck Schumer got played by President Trump and Elon Musk in the Doge process, that kept the government open at the beginning of the year. I don't think Schumer and the Democratic Senate will play the same rules by the same rules going into the fall. I think the likelihood of a government shutdown is rather high, given the environment we're currently in, highly partisan environment we're currently in, and that will curtail a lot of serious policymaking that could otherwise be done.
All right, not an optimistic note to end on, but we'll leave it there, Mr. Chairman. Thank you, as always, for joining us. Of course, former Congressman from North Carolina, former chair of the House Financial Services Committee, Patrick McHenry, now a Bloomberg contributor, here with us.
Thanks for listening to the Balance of Power podcast. Make sure to subscribe if you haven't already at Apple, Spotify, or wherever you get your podcasts. And you can find us live every weekday from Washington, D.C. at noontime Eastern at Bloomberg.com.